So Janaji gave a very interesting and quite a perspective on how manager remuneration going to be looked at. I think so far a lot of views are there that this is the great tool to save the taxes, but technically there are a lot of legislations which are currently also applicable, and we need to see how even the executive regulation going to come back. Thank you very much, Janakji, for all the insight. I'm sure participants have a lot more questions as we move towards the end of the session. But looking at the time, I'll just jump into the free zone discussion points. So what we have done is we have taken 3 reference points. So far, we have a law, so that's what we are using. We have a public consultation document. Since the regulation has not come, so we are going to use that as a reference point, and the Q&A. So these are the 3 documents which we are using to get into a framework of what we are going to see in the further slides on free zone. The first thing comes, a lot of free zones have different period for which 0% corporate tax or tax holidays are being declared into. So I'm just sharing 2 reference points which we got with a link from Abu Dhabi Global Market and DIFC. ADGM says 50 years, 0% corporate tax. DIFC says 40 years, 0 taxes on corporate income and profits. Now, since the regulation is still not out, we are still in the double guess game, how this will be applied to various free zones and what are the impact going to come up to. So there are some of the assumptions we are using and some of the actions we are looking at from a free zone perspective. And as we move along, I'll pick up each slide and we'll try to dissect and see where the legislation is clear right now and where maybe there is an ambiguity. The first section, which is an Article 18. So I'm talking about a corporate tax law, which is there, which talks about a qualifying free zone person. So there is a very clear indication who are the free zone and who are the qualifying free zone. So qualifying free zone has to meet all of the following conditions. So it's not about any, it's all. So first condition says maintain adequate substance in the state. That means they should have enough of people, office, and other things in the state. Now we have to relate it back to economic substance regulation. Although in some cases where we have only where we do a relevant activity, we were testing the substance requirement. But I think now, as we talk about, in spite of whether you are conducting a regulated activity or not, and if you are part of a free zone and you want to be part of a qualifying free zone person, then the substance has to be looked at. State is United is a UAE is what we look at from a definition perspective. Next point is derives income, that is qualifying income. Now, what is qualifying income? We want to look at it as specified in the decision issued by cabinet at the suggestion of the minister. So this is where we have to detailed way wait from executive regulation perspective, where they define what are the qualifying income. For this section, we are going to use ECD, which is a public consultation document, and we will put a reference from there, how we can read it as we talk right now. Next comes is has not been elected to be subjected to corporate tax under Article 19 of the decree law. So in the Article 19, it says, although you are in a free zone, you can still select to be part of a standard corporate tax rather than a free zone corporate tax. So I'm just using those terminologies. Now, what are the benefits? Are these beneficial to take a standard tax? There are instances, or there may be instances where there will be a benefit, and we are going to look at that in the further slide. Next comes complies with Article 34 and 55. So we have looked at, Janakji has referred to 34. So technically RP and related party transactions and arm's length, all those things comes as part of it. Last point is meet any other conditions as may be prescribed by the minister. So we have to wait for all those conditions which we need to look at. Now, this is an important part which says that if a free zone has a qualifying income and maintains all the conditions which are specified here, then only it can be qualified as a qualifying free zone person. And then only the further conditions or actions comes into play. Now, a qualifying free zone person, again, there is a definition which looks into that fails to meet any of the conditions which are there in the clause 1 of the article which we read through during any time. So what happens is the tax period shall cease to be qualifying free zone person from being of that tax period. So if you are going to break that in mid of the year also, then also there is a problem. So that is where it comes into. Notwithstanding anything contained in clause 2, ministers have conditions where they can be superseding. So I think we leave it to executive regulation to translate and transmit into. Now, the next point comes is what we talked about, a free zone, whether it's a 50 years or a less period. Again, there is going to be more clarity which will come up in the executive regulation is what we expect into. But right now, if you follow through all the principles, what we talked about, clause 2 of Article 3 can comply to. That means clause 2 of Article 3 says, corporate tax shall be imposed on qualifying free zone person at the following rates, which is 0% on qualifying income. Now, why the word qualifying income is used? It's a quite a good catch, which I was able to get it while reading the law. And to be honest, it came up after reading multiple times that what is the difference coming up on this section. That also we'll look at. Now, just a quick poll or a question, maybe if you want to give an answer, it's a true and false. 9% on taxable income that exceeds the amount specified in a decision issued by the cabinet at the suggestion of minister. Right now, we're assuming it to be 375,000, although the value is not there in the law. So is it okay to say that in all cases, we will have a bracket that up to 375,000, we will not have to pay any taxes. Anything beyond that, we are going to pay 9%. Just think around, ponder it, and that's where the surprise element, or you can say the intricacy of the law changed. What we read in the executive, in the previous consultation document, and what came in the law. Now, let me take you through the framework, which is Article 3, which says, the point number 1 or the clause 1 says very clearly, corporate tax shall be imposed on taxable income on the following rate, 0%, up to the threshold, and beyond that, 9%. That's first part, which is perfectly fine, and which is what we all are aligned to. Now, if you look at a clause 2, this is where the corporate tax shall be imposed on qualifying free zone person the following rates. Now, 0% on qualifying income. So that means what we looked at. If you earn an income which is under the category of qualifying income for a free zone. Now, what are the qualifying income? We have to look at it. So nothing to worry about as we talk right now. But the next clause is what it gives an interesting clarity. It says 9% of the taxable income that is not qualifying income under Article 18 of the degree law and any other decision by the cabinet at the suggestion of ministers in respect thereof. Now, there is no threshold now, if you see. If you are having a qualifying income in the free zone, you pay 0%. You don't fall under the qualifying income, and you have taken a stance that you are a qualifying free zone person, then on the entire income, which is not qualifying income, you have to pay 9%. There is no slab, no threshold. 375,000, what we are assuming, will not apply in those cases. So that's an interesting part I will use, which comes into the free zone. And in case you, and as per Article 19, you want to go out of those sections, then you will get a 375,000 breakup. So that's where the threshold and the value base may comes into difference. So this is a decision factor, quite important, just to rephrase and how the Article 18 is being attached into this. Now, just to say, qualifying free zone person can have two income, 0% on qualifying income and 9% on non-qualifying income, which does not get qualified. So this is where the differentiation of free zone clearly comes into, and an important factor also to take a decision whether we want to be on this side or that. Now, as we talked about Article 19, what if I want to pay taxes in free zone? Because I feel that if I take a bracket of 375,000, I may end up paying less taxes than the other case. So a free zone person will be allowed. Now, where it comes from? So it comes from Article 19. So again, there are a level of interpretations which are there. One, it talks about a free zone person can make an election to be subject to corporate tax at the rate specified under Clause 1 of Article 3 of the decree law. What is Clause 1 of Article 3? So if you see on the right side, Article 3 is what I have just reproduced. So Clause 1 says 0% and 9% beyond 375,000 as an assumed value, which you are taking right now. So that can take an election that I want to go into standard clause rather than the free zone clause. Now, the moment you do that, it will apply from the period when the election is made or from the next period, whatever you say. As per interpretation, there is no withdrawal clause looks like in the law. That's what we are referring to as irrevocable election. So once you decide, you stay in there. Maybe we need to wait for executive regulation. Maybe they will give some lock-in period that you cannot change it back within the next 5 years or 10 years, or maybe it can be irrevocable. As per public consultation document, it was mentioned as irrevocable. And as per current law interpretation, we are also reading it that way. But we have to wait and see more granular details that whether this will have any impact in the long run or not. So that's where it comes into. One factor which I always say that free zone generally does not allow any business with the mainland. So that's a clause which is very clear. So this is what we have read and what we saw from a law perspective, which has come up. What we are going to do is we are going to maybe connect the law and the public consultation document, which is the document available in our portals right now, review. So there is a very interesting clause which says, now there is a lot of discussion whether service within the free zone will be 0% or will come under the bracket of 9%. That is whether it's a qualifying income or non-qualifying income. PCD 3.28. So I'm looking at the consultation document reference point 3.28, where it says a free zone person can benefit from 0% corporate tax on income earned from. Now there are 3 sections. Transactions with businesses located outside the UAE. So if you do anything outside UAE, perfectly fine. You come under the qualifying income category. Next point is interesting, where it says from trading with businesses located in the same or other free zone. Now, if you see the point number A and B, there is a difference of point number A even covers trading and services. That means goods and services. Whereas point number B talks very specifically about trading. So should we conclude or should we assume that the services, if they are provided within the same free zone or other free zone, will not be under the category of qualifying corporate tax? Possible. So that's where the interpretation is coming into. So this is where the reading is coming in. If you do any kind of a service business with someone who is located outside the UAE, may qualify or may come into the qualifying income category. But if you do only trading, that means if a service is done within the same or any other free zone, that it may be subjected to tax. That's where the interpretation is coming up. And there are certain additional comments they have talked about regarding foreign markets. I'm sure this is quite sensitive because financial services are given a special benefit and will be given a special benefit is what we believe in the executive regulation also as we talk into. So this is what, how about services? So far interpretation comes up if a service is performed outside or provided to a person outside UAE, perfectly fine. But if it is within free zone or with other free zone, then it may be subjected to a 9% bracket. So this is the one clause which will push a lot of people to come to the standard clause of taxation rather than taking a free zone stance. Now there are further sections which says very clearly, again PCD 3.29, where taxed at a regular corporate tax on the mainland source income while continue to benefit from 0%. Now this is again for a free zone person that has a branch in the mainland UAE. So this is the benefit which is being given. Certain conditions, what incomes, what expenses are allowed or not, which are part of it. Free zone person transaction with mainland UAE does not have a mainland branch. Income which is pure a passive income. Now passive income definition is quite tricky right now. We cannot talk rentals because rental is being classified in a different way in the legislation or the law right now. We can talk about a passive income. I can right now assume more a dividend kind of a structure than anything else, but no active income. Just to maybe clarify what is the difference between passive and active. Active is where you're actively engaged in trading or doing a business. But in a broader definition, passive comes to royalty, interest, dividend, all those incomes which generate on its own. Although their efforts are there, but it is being classified as passive income. Dividend is one of that where if it has arrived, then it may not be taxed at any different rate and you get a benefit of 0% corporate tax. Transactions between free zone, and their group companies. In this case, they have very clearly said 0% corporate tax regime will also apply to transactions between free zone and the group company located in mainland UAE. However, whatever payments are made to the free zone will not be allowed as a deductible expenses in mainland. So let's say if you have taken some services or done some transaction with a free zone company and you made $100,000 as a payment, then mainland will not be able to claim expenses. So technically speaking, you're paying taxes of the income which is being transferred from mainland to free zone in the mainland itself. So that's where it comes into, and it's a quite interesting and logical clause is what we believe. Now what they have done is they have even connected corporate tax with VAT also, and they said that any free zone person which is located in designated zone for value-added tax purpose can benefit from 0% corporate tax rate on the income from sale of goods to UAE mainland business that are the importer of records of those goods. So in case mainland company imports the goods, that means the free zone company has technically sold the goods in the warehouse space itself, that is within the free zone. In that case also, the benefit of 0% corporate tax comes because from a designated zone person perspective, they have sold the goods within the free zone and not in the mainland. So that's where the interesting point and clauses are going to look at. My suggestion is again going to be if you want to look at a corporate tax, we need to connect some of the dots of VAT and some of the dots of customs also in some cases. So that's what we look at. Now this is a public consultation document, but there is an interesting change or the flip we have seen, which came from between the consultation and the law. Initially, it says to prevent free zone business from gaining an unfair competitive advantage compared to business established in mainland UAE. Any other mainland source income will disqualify a free zone person from 0% corporate tax. So this is where they said if you do any other income, you are out. But that got changed. If you see, now they said, okay, it's fine. But from a law perspective, if you earn a qualifying income, you pay 0% tax. If you don't earn a qualifying income, you pay 9% tax. So this is a change which we have seen. And on the right side, you see all the 4 clauses which are part of it where 0% corporate tax may apply. Now, what we do and how we do about apportionment of expenses. So this is an interesting point. I'm sure executive regulation is going to ponder a lot on this. And this is where it comes into. Looking at the time, I'm skipping the example, which I thought I will pick it up. I'll jump into the last slide, which is state source income. So there is a lot of deliberation on the state source income where even the goods trading within the state and the free zone includes state are part of it. As we look at, it says it's going to be taxable. Now, again, it's going to be taxable at 0% or going to be taxable at 9% is what the interpretation need to be looked at. So this is where I stop and from a free zone perspective, how those legislations are going to impact it. We are given a high level view and there is a lot more which is going to come up as we move from a legislation, from a law to an executive regulation.